Tonight's recap. It is being live streamed. So just bear with me a second as I was doing a little bit of testing before trying to get this right. Today is Tuesday, the 14th of November, and geez, what a market it's been so far to basically start us off here on the month. I mean, look at so we've had a couple days. I feel like we've had a couple days like this, but certainly we've had some amazing performance so far to kind of kick off the month. So let's get to the price action at hand and just to kind of recap things. But what I find interesting on days like this is when you have an event for the day, such as the CPI coming in lighter than expected. It really helps to kind of set things up a little bit in terms of I talked about if you watched yesterday's video, as well as I went over this with members yesterday morning, so we can kind of devise a little bit of a strategy and a trade for today's event. But just talked about running a scenario analysis. What happens if the CPI report comes in a little bit lighter than expected, and which is what it did today. Just to by the way, like just a tenth of a percentage point. And that kind of means that that the risk was to the upside, meaning that there wasn't a lot of good news priced into the market. So finally, like something like this coming out really kind of ignited the market to the upside and really into some of your areas that have been under owned. So for example, the area that really exploded to the upside was the small caps. The micro caps too, if you pay attention to those, that's IWC was also up 5.5% for the day. Also really strong breadth when you look at the with the breadth, which is usually accompanies when the small caps outperform. But as we measure it, like the up volume versus down volume, of course you could look at like advances versus declines, or there's with $ add, I think, or something like that you could put on Thinkorswim. But here's just graphically, right? This is up volume divided by down volume, and you can see there was a pretty good magnitude, right, in terms of really big participation today in the move. So again, what this does is it looks at not just advancing versus declining, but it also associates the volume behind the up movers to kind of give you a sense of the strength. So we had a really strong breadth day. You can measure it that way. You could also look at how many groups were up. But part of what happens here is I mentioned the small caps and how they really haven't been participating. They've been really affected by the interest rates. That's the first thing that we normally go to when you have a day like this, right? Is to look at what like TLT did, which had a humongous day today, up 2.3%. So a move like that, right? I was on Benzinga earlier talking about how it's a little bit foreign for some traders to have to look at interest rates, because if you go back 3, 4, or 5 years ago where the interest rates were flat and close to zero, they're just what you just didn't have to really keep an eye on them. The moves were very small, but now we've got a different situation on our hands. So when TLT moves up 2.2% on the back of a CPI report, which again is what the effect that we were talking about could basically happen, right? Here's what I said yesterday, right? I said the rationale, right? I just put this on towards the end of the day. I said, if CPI is less than expected, what will rally? My guess is IWM, as it seems the bigger cap tech is already getting overcrowded. So that's what you had. Where does this take us in IWM? It actually gets us out of the value area. So that's a huge move. This is still very sideways. So I don't necessarily, even though that's a really nice move, it doesn't really get me excited with this chart. I would rather kind of go and pick just different areas that are showing relative strength, not so much on the relative weakness side. Because as I've said, in my trade for IWM was a very short-term option trade, just looking for a bounce and a downtrend. Again, I define a downtrend by anything that's below the 200-day moving average. You can debate that all you want, but uptrend is above the 200-day moving average, downtrend is below. So what was interesting is we didn't really see other areas get rotated out of. The Q still had a really nice day today. Up, that's perfectly I think more than acceptable. There wasn't the rotation into small caps and out of tech or out of Qs. And I think that why that didn't happen that way is just because I think everybody's not exposed to this market, right? We've seen that in the past where if there's already a decent exposure to the market, you'll see, okay, people getting out of this area and getting into this, getting into a new area, and that money gets rotated around. I think overall, there's a lot of people that are hanging out in T-bills and in the money market. Depending on, not everybody buys T-bills, and I've talked to a lot of people. I own them, but it's a pain in the neck, right? Depending on what platform you use. I use Treasury Direct. You've got to go in, you've got to monitor it. It's a very old website. It takes a while to set up an account. Some people use Public. I know I've talked to some people because they do that. Does the you can like auto roll not futures, the T-bills. But regardless, the point that I'm trying to make here is that there's a lot of people. So if people aren't doing T-bills, you could still get like at Marcus, right? I have an account there where you're getting 4.4%. So there's going to be that shifting out of those areas and, out of the money markets or T-bills. And I think that's why you saw everything kind of go up today, right? And then, of course, there's a lot of shorts in this market too, right? They've got to cover and they've got to get out of their shorts. And that, is like Tinder for the market. So here's where we are in Qs. We're basically challenging the highs. And there's a number of scenarios that could go on from here. We could back and fill a little bit. That to me would be perfectly normal after coming back. And by the way, it's pretty exciting, isn't it? Right? We haven't. I heard somebody say this before, that hey, if we're in a bull market, which I don't, and I certainly don't want to get into the bull versus bear market debate, but we haven't made, the indices haven't made new highs in a while, right? The last time it was basically 2021, right? Since even the Qs, which are up a lot more than SPY, right? So we're not back to new highs. So there could be some more to go in the tank. And you could see what SPY looks like here. Still have to get through some overhead resistance. There's going to be a 454 VPOC over here, and so on and so forth. RSP, right, which is the equally weighted. I don't know if you guys have been looking at these, because I don't think I've brought them up in my end of day videos. I brought it up for members, but this is still below so this is the same S&P, same components, but just equally weighted. This is still below the 200-day moving average. So, there has definitely been some really underperforming areas, right? It's the banks, solar, a lot of the defensive areas of the market, that are interest rate sensitive. So, there could be a lot of catch up plays going on if we continue to see this move in interest rates. Don't forget tomorrow, right? We do have some more events, so things could change a little bit tomorrow too, because not only do you get the PPI report, but you also get retail sales. So, the rates could go back higher a little bit if this retail sales comes out tomorrow and it comes out higher than expected, right? You could see rates kind of move higher a little bit, right? And that, might cause some of that rotation that we saw today to kind of halt. So it's going to be interesting, right? And that's basically what's been happening. Is that some of the economics, I think, have really been driving some of these not want to say rotations, but basically moves, right? Another thing to look at too, which people are talking a lot about, is what's going on in terms of Fed fund futures, right? So right now this was about an 18 or 19% just about a week ago. Remember, it was just a week ago where we had the last Fed meeting, right, with Powell, and it was about an 18% chance of a rate hike coming on the December 13th meeting. Now that's not indicating anything there. And even so, when you start to kind of look out to March, the market is actually pricing in about a third of a chance that they cut interest rates. Right. So again, just to kind of give you a sense of like outside of movers. Now we could talk about stock movers. I thought, again, you look at the solar group, right, and how bad this thing is in a downtrend. I don't play downtrends, I play uptrends, I play relative strength. So I would rather be in an area like this, right? The home builders. Now, the home builders did jump up right into this virgin point of control. I thought XHB, which is the equally weighted, they call it the home builders ETF, even though there's not as many home builders in it. But notice how this was just consolidating right at the top of value. And I went over in yesterday's video, I went over Pulte Homes, which had a humongous, I'm running out of adjectives, I guess a humongous gain. But remember, I illustrated this in yesterday's video, how a thin value area like this, right? Look, so, what a great example of like using the value areas and understanding volatility, right? This is really kind of similar to when people talk about coiled, right? Coiled is a term that a lot of technicians use when three moving averages kind of wrap around themselves, right? So we're doing this, we're looking at this on the 1 hour chart, right? And that was just a colossal move, jump out of the value area, and a nice move. In the trading room, we talked about that trade idea too, putting on a call and putting on a put, because you didn't know which way this was going to break, right? Price was kind of just sitting there inside the value area. So nice move here, and just aggressive move, just as we thought that there was going to be a decent move. So my trading for the day, let's just bring this up one more time just to kind of go over. The banks also had a huge day. Anything in dark green is over 2% for the day, but so many different areas. Look at still the cyber names, which have been on fire, right? Had a really another big day. So this is great for market bulls. If you were positioned that way, you certainly took advantage. I've been adding exposure both in my trading account and we've been talking a lot about risk management, and having the right exposure, something where you're comfortable, something where you're playing offense, right? And I think that worked really, really well. So, I'm very pleased at how this month has been unfolding so far. Again, it's just basically, the first half of the month, but, we've gotten a lot of confirmation with, with the market breadth, the McClellan summation index really giving us some good signals. Here's what my watch list looks like for the week. I mean, this is pretty crazy. You've seen me tweet this out. I tweeted this out over the weekend, but we had names like Trex, which I did not get into Trex, right? But I was noticing that this was setting up pretty well. I did get into STLD today, which again was not that big of a mover today, but I wanted something a little bit slower today too, something that I felt comfortable buying, because it's not easy to, the days where you gap up like this are not easy to add risk. I'm always a net seller on days like this, just a principle, but just amazing some of the follow through. And again, this isn't just the percentage for the week, right? We have a trigger based on a technical level for these, but I've had CrowdStrike on this watch list for the last 3 weeks. I own it in the TTG trend portfolio, so very strong. DKNY, which had like I think it was either their investor day, right? This did pretty well. This was nice follow through. We put on a position yesterday, after the virgin point of control. So nice move there. Here was the Trex setup, by the way. And again, members receive all these setups. I put charts for every one of these names, but it just looked like, of course, I didn't know that this was going to move up like this today, but just a tight price consolidation and hanging above the value area. That's really important when something breaks higher and then comes in back into settle, consolidate, that it stays above its value area. That's really good strength, right? And we could go up and down this list, but BLD, which is another builder, right? Datadog had some nice follow through to it. Caterpillar, which I was in yesterday, I did not stay in this trade from yesterday, but wanted to see the industrials kind of start to kind of catch up a little bit too. That was an area that was showing some really nice strength earlier in the year and then kind of fell apart. So XLI kind of comes up here. I was actually looking at this ETF too. This was an ETF that I really liked earlier in the year because it was showing all kinds of relative strength. This is it's called the Renaissance and Industrials ETF. Watch this 5129. If you're looking for something, this looks a little bit healthier than the overall Industrials ETF. All right, so I mentioned STLD. What did I like about this setup? I like that you've got a base here. You've got a breakout, right? And then you had like 6 or 7 day red days, but right back into support, right? So I'm still long that. I did take a target in it. On the retail space, which was another area that is kind of a catch-up area, I like this Ralph Lauren, which had good earnings, didn't do too much, kind of came back and actually did fall inside the value area, but nice green candle here, was up about 4.4%. So again, looking for something, retail, because you're going to have a lot of names that name reported last week, but you're going to have a lot more report. I own some TJX. Ross Stores also has been looking really good. Both of these names are going to report coming up this week, so that will be interesting. What else did I want to talk about for today? Here's how I managed today. I was in Nvidia. My price target for that was 493. So I got out of this. Don't forget that name reports earnings next week. TW was a really strong name, slower mover. Just worked really well. I traded some Square today because that had an insider purchase. Again, a lot of exits for me. Again, like I don't kind of question when we start up on the day 2%. I just start to, I'm always a net seller, right? And then when things settle down, I begin to kind of look for trades. I did start a position in a name that I've talked about a few times, which is PDD, which is a China name. You have to watch the China names because they're a little bit more volatile. And they move a lot in the overnight market, of course, because China trades while we're sleeping. But I think this is an interesting setup too. So I'll leave it there. I don't want to keep too long of a video, but I think overall, we're seeing everything that we want to see. We're seeing interest rates, you know, on all across the curve, we're seeing interest rates go back lower. Remember, the Fed only controls the short term, the overnight rate. They don't control TLT or any of that. That's all supply and demand. So I know it gets confusing if you're not used to when you hear about interest rates, but there's all different types of interest rates. The Fed only controls the overnight rate, right? They don't control TLT and the longer dated rate, but that affects everything or a lot of things because that's where companies finance their debt or refinance their debt, right? And then the dollar is another thing. I mean, look at the move in the dollar today, right? That was down 1.6%, right? That's risk on, right? So that's really interesting. One other thing too, I would look at is Japan, right? Japan, this is DXJ. So this is Japan with no FX, right? So you're essentially long the dollar here with this, right? So this was still up 1.3%, right? And look at the trend that this has been in, right? So it has no FX exposure. Normally, when you buy an ETF, you have exposure in the local currency, right? But this hedges it out. But you might see a catch up here in EWJ. Very similar baskets of stocks, just one has a FX exposure, one does not. All right, guys, that's it for today's video. Have a great night. See you tomorrow.